What's good, my YouTube fams? How's everybody doing today? Hopefully everybody had a wonderfully blessed day. Hopefully you guys had a green day in the markets. Most importantly, this is Crypto and Stock Talk with Jaime. That be this Mexicannn right here, not the Mexicannn. I am the guy that brings the latest and the greatest in the crypto and in the stock world, guys. So hopefully your account, my account, can go up in that dinero, in that skrilla for real, trying to make it to that $1 million mark sooner than later. Guys, none of this is financial advice. This is just me yippity yapping on YouTube, sharing my thoughts and opinions. Nothing more, nothing less. If you need a financial advisor, I suggest you go get one because I am not him. Guys, we're going to talk about tops. We're going to just dive right into it and get right into it, guys. We're going to be talking about tops. They are the baseball card company, guys. They've been around forever. They're the owners of Ring Pop. How many of you guys remember the candy Ring Pop? Bazooka Joe, right? Well, that's who Tops is and owns all that. Aside from the baseball cards, they own Bazooka Joe and they own Ring Pops, which are still around, guys. Anyways, they came onto the stock market April 6th. I'm gonna read an article that breaks down it gives a price target, where they think this is going to go, their financials, what they're into, what they're going to get into, the bullish thesis over it. You know what I mean? So I'm going to kind of skip through the article here. Now, if you want to dive in, do a deep dive yourself, you can type up MUDs on Seeking Alpha, and this article will come up. If you want to read the whole article, I don't want to take up too much of your time, just enough to give you some insight and some good info on tops. Now, if that sounds good to you guys, do me a favor, destroy that like button, hit that notification bell so you can be notified when I come through with the latest and greatest. All right, guys, let's get it. It says Tops, a well-priced company with substantial upside. I'm going to read the quick summary. It says Mudrick Acquisition is a SPAC that has entered into a deal to merge with Topps Playing Cards. The combined entity's valuation currently sits at $1.6 billion. So obviously it's not a little company. The valuation conservatively prices the profitability of the legacy playing cards and confectionery business, but leaves substantial upside for the digital/NFT business. Anything that has NFTs on it shoots up to the moon, guys. Not everything, guys, but NFTs is booming right now, and anything that has to do with NFTs will more than likely shoot the price up of the stock. The company is well positioned to experience explosive growth if the recent boom in NFT continues. And in my opinion, I believe it is. I invest in crypto as well. I believe in crypto and what it is and what it's doing and what it's going to do in the future. I think NFTs are here to stay, whether people believe it or not or want to accept it or not. That's just my opinion. Without growth in NFTs, the company will likely still benefit from shifting its product mix to NFTs and generate substantial higher margins on similar revenues. Okay, the introduction, right? I'm just gonna, like I said, I'm gonna chop it up through this, right, guys? I'm gonna kind of skip around through here. So it says on April 6th, Mudrick's acquisition, a blank check, a SPAC, they had merged. They had been that will be merging with Topps, the 80-plus-year-old company, best known for sports cards and Bazooka Joe bubblegum. Initially overlooked by investors, the entity has traded a moderate premium to the deal level, 13 versus $10, due to a knowledgeable gap in understanding the transformative nature of Topps business from the adoption of non-fungible tokens, NFTs. These NFTs since hit the market and have generated extremely strong interest from collectors, and should these trends persist, will easily multiply Topps valuation by many fold. Valuation of traditional business. I'm going to kind of I'll read a little bit of this here, guys, and then I'll skip. It says Topps has two major business segments: the sports and entertainment cards that everyone has known for many decades, and the confectionery candies like Ring Pops and Bazooka Joe. In 2020, the company generated a combined $567 million of revenues and $92 million of pro forma adjusted EBITDA at a current stock price of $13. The post-SPAC deal implied valuation for the business is $1.7 billion, or 3x revenues and 18x FY 2028 EBITDA. These middle-of-the-road metrics neither put them in a cheap value or expensive growth bucket. So obviously, guys, they're not cheap, they're not too expensive, they're just sitting spanking right in the middle at a good price, in my opinion. Simply put, the numbers are in line with market multiplies of comparable companies. Looking at the traditional business on its own, there's not much of a story to tell other than the fact that it provides a really reasonable margin of safety for investors. All right, guys. Let's see. It says the company has a strong brand, defensible moat via exclusive contracts, and generates significantly free cash flow, $90 million in 2020. The company can fund its growth with its internal cash flow instead of raising dilutive financing or simply pay dividends in the extremely low interest rate environment. Unlikely, but possible. Okay, guys, so alrighty, so here it says here, it gives you a little breakdown. Let's open this up right here. I'm gonna click on it. Oh, it's not opening up here, guys. Oh, there you go. No, it's showing you kind of who some of these business partners are, guys, right here. Let me get out of there. It's not working for me. See the physical, digital, gift cards, right, guys? So it gives you a little quick everything that they're into right here. Look at that. It has Uber, Netflix, Hulu, DoorDash, Airbnb, Pop-Up, Bazooka Joe, Push Pop, Juicy Juice, right? For the candies and the digital. Look at that. It shows the all the stuff here, guys. If you want to do it, I can't really see it, and it's not letting me open it up. So now on the NFT upside, right, I'm just going to read a little brief of it, right? It says now, Topps is one of the few public traded companies that has the unique opportunity to transform their business via this use of NFTs to investors. This is significantly upside that you get when you invest in Topps, practically for free. All right, let's get into some of the good stuff here, right? It says, NFTs allow Topps to print money for free and also receive dividends on their IP. Being in the baseball card business is already strange, given that you can print cardboard pictures and sell them for significantly sums of money. Strangely enough, it's quite expensive to print cardboard, ship it to distributors, market it, and then finally sell it. Topps has provided this illustration of their contribution margins. In addition to showing sensitivity of their variable and fixed costs, right? And it shows you right here breakdown, right? And it says from the table we can infer that the variable cost to produce, ship, and distribute physical cards is approximately 20%. An additional $50 million of sales has an additional $10 million of product cost. When the company sells NFTs, this 20% cost becomes zero. This nearly doubles the contribution margin that comes from selling cards. Not only that, but the fixed cost to design and set up physical cards is extremely costly. It is not easy making cards with wooden shards in it. And the best part of the NFT business was mentioned by Michael Eisner during an investor presentation. It says, and then the last thing, which is maybe the most important, is the introduction of the blockchain technology. Because the blockchain technology, we can benefit from the secondary market of what we have already sold in the primary market. We sell the product in primary market less than the demand calls for because we want to secondary market to go up, to be a positive impact on our products. I don't know if you understand what they're breaking down there, guys. Basically, they sell it twice, is long story short, is what they're kind of specifying here, saying without saying, you know what I mean? The secondary market, you know what I mean? They're selling, basically like making money off of it twice, right? And then it goes on to say, we want, okay, then it says here, what we want already sold in primary market, we sell the product in primary market less than the demand calls for because we want secondary market to go up, to be a positive impact on the products. There we go. It says, now we can benefit from the sales, which could be 10 to 20 times as much as the primary market, right? So the secondary market, they're making 10 to 20 times, guys, as much as the primary market. So the whole tipping point is about instant gratification, maybe a little bit like Prime Video and Amazon, but it is the idea of changing our business. Since all NFT transactions can be traced on the blockchain, it is true now and likely in the future that Topps is receiving a 6% cut of all secondary market transactions of the cards that they have produced. At present, the liquid markets for Topps MLB NFTs is on Atomic Hub, and one can physically see the transactions occurring and the revenue occurring to Topps account via the smart contract. It says Topps released their Series 1 MLT NFTs on 4/20, and in 5 days they made 1.35 million, approximately 250k USD of the third-party marketplace fees. That's on total issuance of 2.5 million USD worth of MLB NFTs. Just to clarify, that means they sold 2.5 million of NFTs on Tuesday, generating about 1 million in profits, and within 5 days they generated an additional 250k of free profits. So they made $1,250,000 in profits, guys, just from people buying and selling those cards, right? So they made extra 250k being the middleman, right? Just like being the middleman, they made an extra 250k doing shit, just being the middleman, right? Now just imagine on a daily basis or weekly or whatever, 250k will add up very quick, guys. The unit economics of this business are insane compared to the legacy business. To summarize the financial implications of NFTs, Topps, when they sell 100 of physical cards, they typically generate contribution profits about $20. when they sell $100 of NFTs, they pick up an additional 20 on the product side and at least another 20 on the third-party marketplace side. So basically, guys, they're making 40% off of every $100. They're making $40 off of $100 on this analogy that they're breaking down right here. Now, just imagine that on a bigger scale of, you know, hundreds of or millions of dollars. That's insane. That is insane, guys. All right, now I'm gonna scroll out of here. Okay, let's get into here. It says, given the transactions in the initial release, Garnet sold out in 60 minutes, and in the secondary market, premium is currently about 400% face value of 4 unopened packs, and the healthy secondary market liquidity over 5 million of transactions, representing 2x the original notional card value. I see reasonable path to Topps selling over 30 million of NFTs in 2021. Guys, 30 million in just NFTs. That's not including all the other attributes that they got, which would add an additional 20 million of 2021 contribution margin, currently not in the forecast. The incremental profitability would be just a tiny preview of what would likely come in future years. To finally summarize the path that NFTs will open up for Topps: market expansion. NFTs will allow Topps to reach a new, younger, which is important, more tech-savvy customer as they are sold alongside the physical card business. 2. Market hybridization. Topps will slowly migrate physical card buyers into the NFT space due to the considerably higher profit margins associated with this side of business. Realistically, the future will be a combination of path 1 and 2, and the exact magnitude and pace of market adoption is unknown. However, the data points that we can observe so far suggest huge demand and quick adoption in this space. Now, primary market participants, right? And it talks about the buyers here, guys. And then the holders, right? And the sellers, secondary market participants. Okay, guys. So, like I said, if you want to look it up, do your own research. It's in Seeking Alpha. I'm not going to really dive all into this here. Now, it says, how can the bull thesis play out? Okay, says there are a handful of catalysts that I can see in the next 3 to 6 months that will cause Topps price to increase dramatically. 1, the NFT business continues to gain traction. The company sells 10 million plus of NFTs, and the third-party marketplace continues to actively trade. These cash flows will flow through to Topps income statement and will be reported on their Q2 earnings release, which will make it impossible for investors to ignore their contributions. Other institutional investors like Viking get interested in NFT exposure. The floats for MUDs is tiny, and 3 to 4 more institutions putting on 20 million positions in the company will easily double the stock price. Easily. Retail investors go crazy over NFTs, I agree, and jump on board MUDs while relying on retail speculation. Momentum is generally a terrible investment strategy. You can't ignore what has happened to Dolphin and HOVW in the past couple months as NFT mania crowded into those companies. I agree. Those two companies, Dolphin and HOVW, guys, shot to the moon because they're part of the NFT fad that's going on right now, and those shot to the moon, guys. Go look them up and you'll see in the last couple months, like I said, the price has gone insanely high. Upon merger completion, long only funds that typically don't get involved in SPACs but buy into MUDs based on its growth as a reasonable price type. Attribute 5. Big contracts, when announced by Topps, bring increased attention to the company at the entire NFT space. Topps is one of the most credible names in collectibles and should be well positioned to partner with top brands. I agree, guys. Everybody knows who Topps are. Conclusion: the legacy. This is where we're going to close out, guys. The legacy Topps business is a solid one. It has 80-year pedigree and extremely strong brand, and that means a lot when selling artificially scarce value. Their MLB card license goes until 2025, and they hold a handful of AAA sports / brand license. They have, it says F1, UEFA, Star Wars, and WWE cards as well. The investment in this company as a standalone legacy business is generally not very risky. However, when investing in Topps, you will essentially have a free call option with exposure to the massive potentials that come from the expansions of NFTs. Estimates for the market are largely pointless given how few data points we have, but the economics make it clear that success in the market will result in the stock price expanding by multitudes. To use a single comparable data point, Dapper Labs, the business behind the NBA Top Short NFTs, just closed around at a $7.5 billion valuation. I wouldn't suggest that Topps NFT business currently garners the same amount of interest. Let me scroll out of here, guys, and Oh, here we go. It's a price target. This is where I want to get to. It says the top NFT business currently valued at somewhat between 0% and 5% of DApps Labs. Valuing them at 20% would be a stretch and would imply that Tops Mud's stock price would double overnight. My price target for Tops is currently 28 with 18, 30, and 55. Conservative, moderate, aggressive scenarios. So guys, they're giving a price target between $28 and $55, which is pretty good from where it's sitting at right now. It's at currently $15 and some change. Guys, it says finally reviewing others who are actively trading. Okay, so guys, and you know, my setup is, sorry about that here. So I'm gonna give you guys some levels of resistance here, guys, and I'm going to close out. You know what I mean? Like I said, this is Wall Street, guys, is obviously super bullish on Tops. In the last week, they're up 32%, and the last month, 69%, guys. Like I said, they just came on the market April 6th, so they're a new company, guys, but don't count them out. The first level resistance, guys, is at $17.17. Second level resistance, $17.69, and that third level is at $18.28. Now the first level of support is at 1606. So guys, it's sitting spanking right at a little bit under this. And the second level, I'm sorry guys, hold on. Second level is at $15.47. And the third level is at $14.95. And like at let's go here and we'll actually look them up right now, guys. I think they are at $15 and let me see here, and like I think 15. Oh, 1671. I'm sorry, guys, 1671, right? And so they're like I said, their first level of support is at 1606, and first level resistance 1717. So they're just sitting right spanking in the middle of the first level resistance and support. So technically it can go up or it can go down, guys. But in my opinion, I think it's going to continue to shoot up. But just keep in mind, the first level of support is at 1606. So it could bounce off that level and go back up. But if not, it can continue to go down, guys, to that second level, which is at $15.47. Right? But if it continues to want to creep any lower, it can come down another couple dollars, guys, from where it's at now, down to $14.95. So just keep that in mind, guys. Those are the price. Those are the levels of resistance and the levels of supports. This is Crypto and Stock Talk with Jaime G. Hopefully you found this video useful, guys. If you did, please consider to like and subscribe to the channel and turn on that notification bell, guys. You guys have a wonderfully blessed night. Hopefully you guys enjoyed this video and it was helpful to you guys. Until tomorrow, guys. Peace.